Good day Forex trader. Your USD Forex signal, extremely bearish ahead of US data. The pair will likely keep falling as investors attempt to move below the key support level at 1.1500. Bearish view. Sell the Euro USD and set a take profit at 1.1500. Add a stop loss at 1.1650. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1600 and a take profit at 1.1700. Add a stop loss at 1.1700. The Euro USD pair was in a tight range in the overnight session as investors waited for the closely watched American inflation numbers. The pair is trading at 1.1572, where it has been in the past few days. US inflation data ahead. The US published strong employment numbers on Friday. The better-than-expected numbers showed that the country's economy created more than 500,000 jobs in October while the unemployment rate declined to 4.6%. In the past 2 days, the Euro-USD pair has remained in a tight range as investors watch the upcoming inflation numbers. The data, which will come out in the afternoon, is expected to show that the country's inflation continued rising in October. The median estimate among analysts polled by Reuters is that the headline CPI rose from 5.3% in September to 5.8% in October. If they are right, the data will be the highest since early 1990s. Core CPI, on the other hand, is expected to rise from 4% to 4.3%. These numbers will be significantly higher than the Federal Reserve's target of 2%. In its most recent interest rate decision, the Fed said that inflation will keep rising in the coming months and then moderate to about 2% in the coming year. On Tuesday, data by the American government showed that the Producer Price Index, PPI, rose by 8.6% in October while core PPI rose by 6.8%. These increases were relatively lower than the median estimate by analysts. The other key movers for the Euro-USD pair will be the German inflation data that will come out in the morning session. The data is expected to show that inflation rose by 4.5% in October while the harmonized inflation rose by 4.6%. Europe's inflation will likely get worse considering that gas prices are soaring. Euro-USD forecast. The hourly chart shows that the Euro-USD pair has been rising gradually in the past few days. It has even formed an ascending channel that is shown in green. It is currently along the lower side of this channel. Also, the pair has moved below the 38.2% Fibonacci retracement level. It is also approaching the standard pivot point while the MACD has continued dropping. Therefore, the pair will likely keep falling as investors attempt to move below the key support level at 1.1500. This view will be invalidated if the price moves above 1.1615. GBP USD Forex signal, consolidating quietly. The price is trading between $1.3525 and $1.3600. Today's GBP USD signals. Risk 0.75%. Trades must be taken between 8 am and 5 pm London time today. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3606 or $1.3638. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3523 or $1.3411. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP USD analysis. I wrote last Wednesday that price direction looked difficult to predict. The only opportunity one saw following the FOMC release that day was to have a limit buy order at $1.3502 and a limit sell order at $1.3709, and hope that the release spiked the price to hit one of these levels. This was a call in the right direction as the price rose to within a few pips of $1.3709 before falling strongly, so I was on the right track. However, ultimately there was not really an opportunity here. Unfortunately, the situation is essentially unchanged, with the price trading very flatly between $1.3525 and $1.3600. There is no true trend on any time frame. The only potential opportunity one see here would be to trade long from a bearish rejection of $1.3606, which stands out as the only nearby level which has been pivotal both long and short over recent days. Due to the low volatility, this will probably be best exploited by scalping it if it sets up. AUD/USD Forex signal, sell off to gain steam. The pair will likely keep falling ahead of the US inflation data. Bearish view. Sell the AUD/USD and set a take profit at 0.7300. Add a stop loss at 0.7450. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7400 and a take profit at 0.7500. Add a stop loss at 0.7300. The AUD/USD pair declined to the lowest level since October 13 ahead of the latest US inflation numbers. The pair dropped to 0.7360, which is about 1% below the highest level this week. US inflation and Australian jobs data ahead. The AUD/USD has erased some of the gains made on Monday as investors waited for the US inflation numbers. The data will be important since it will come a few days after the country published October's employment numbers. They are also important since they could show that the country's inflation surged to the highest level in more than 30 years. Meanwhile, the data will come exactly a month after the Federal Reserve delivered its interest rate decision. In it, the bank decided to start tapering its asset purchases by about $15 billion. It will continue reducing the purchases by $15 billion every month. Its hope is that it will conclude its quantitative easing policy by mid-next year. At the same time, the bank hinted that it could accelerate or slow the asset purchases depending on the state of the economy. Therefore, if inflation numbers are better than expected, it could push the Fed to accelerate its purchases. The AUD/USD also fell as investors waited for upcoming Australia's jobs numbers that will be published on Thursday morning. Data compiled by Reuters show that analysts expect that the country's unemployment rate rose from 4.6% to 4.8% while the economy added more than 50,000 in October. The Australian economy has recovered relatively well, helped by the rising commodity prices. The prices of most commodities have risen sharply as investors wait for more demand. This is partly because of the latest infrastructure package. Indeed, Australia will benefit directly since it has major mineral deposits that are used in battery manufacturing. AUD/USD forecast. The AUD/USD pair has been in a strong bearish trend lately. It has dropped by more than 2.5% this month and is trading at the lowest level since November. The pair has also moved below the descending green trend line. Most importantly, it has moved below the standard pivot point and the 25-period moving average. Therefore, the pair will likely keep falling ahead of the US inflation data. The next key support level to watch is 0.7300, which is slightly below the first support of the pivot point.